Hello everybody. In the current affairs this week, the week ended 10th of August 2024. During the start of the week, that is 5th of August, Monday, the stock markets across the globe underwent correction. The correction was led by Nikkei, which was down by 12.5%. But by the end of the week, Nikkei was just 2.5% low. Similar was the trend in other global markets. Nasdaq on Monday was down by 3.5% and S&P 500 was down by 3%, but by the end of the week, it closed flat. As far as the Indian stock markets are concerned, Nifty 50 was down by 2.5% on Monday, but by the end of the week, the downfall was limited to just 1.5%. Nifty Midcap on Monday was down by 3.5%, but by the end of the week, the losses were limited to just 1%. Nifty Small Cap was down by more than 4% on Monday, but by the end of the week, like other markets and other benchmarks, the small cap benchmark was also just down by 2%. This showed that there is a lot of resilience in global markets as well as the Indian markets. A lot of bad news can be discounted by the market very easily and can be digested by the market. But the fact remains that all the sectors and stocks which do not perform in India or globally, there is a correction in respect of the stock prices of those sectors and stocks. And all those sectors and stocks which perform or outperform the expectations of the market, they receive a lot of appreciation. So, as a net result of all these things, there is a sector rotation which is happening in India and across the globe. But at the benchmark level, the markets are appreciating a little or remaining flat. This week, by the end of the week, all in India in the financial markets got access to the Hindenburg report. The Hindenburg report, as we all know, is a report prepared out of certain vested interest by a noted short seller. But whatever was published in the report conveyed certain things according to me. It conveyed that people who are in charge of taking decisions on the financial markets are deeply themselves or their family members are deeply entrenched in the financial markets. So the question which will come up for debate and discussion would be that all those people who are having a lot of interest in the financial markets, and when they sit in the decision making in regard to the financial markets, then will it not result into conflict of interest? These will be the issues which will be debated and discussed in the days to come. This week also saw an important announcement by the finance minister on the floor of the parliament that whatever was proposed in the union budget in respect of taxation of real estate is reversed to a certain extent. What was proposed in the union budget was that whatever will be the long-term capital gain in respect of real estate would be taxed at a flat rate of 12.5% without allowing any indexation. The relaxation which has been granted is that whatever was the older regime, wherein the cost price or the value as on 1/4/2001 in case of assets, real estates which were purchased before 1/4/2001 would be subjected to inflation indexation, and whatever will be the net gain will be taxed at 20%. alongside that regime, which was the older regime of taxation, the newer regime, which is 12.5% of whatever is the flat is the capital gains will be taxed at 12.5%. Both will be something which will be available to assessee, and whatever is beneficial can be chosen by the assessee. This sounds to be a substantial relief to all those people who are worried in respect of the tax liability on the real estate. The another important thing which has gone unnoticed in respect of these changes which has been announced is that if there results any loss on account of indexation which was allowed as a set-off or a carry forward in the earlier mode of taxation, will not be allowed now on. So, if in case after the cost price is indexed and we deduct the sale consideration, and if there is a loss, those losses will now be ignored. It will not be allowed as a set-off against other capital gains. That is one. Another thing is that this concession is limited to resident individuals and HUFs only. It is not applicable to non-residents. And as I said, because it is limited to resident individuals and HUFs, it is not applicable to firms, LLPs and companies as well. So non-resident Indians, firms, LLPs, companies will be subjected to taxation at a flat rate of 12.5% on the long-term capital gain on real estate, the way it has been proposed in the union budget. So these were certain noteworthy changes which one needs to understand insofar as taxation of long-term capital gain is concerned. This week, we came across through a piece of information which was something which was very encouraging for the Indian aviation sector in particular. Indigo, which is Interglobe Aviation, which is a listed stock in India, these airline stock, when it comes to the market capitalization, it is the second most valued airline globally. The first being Delta Airlines in the US. So it is now an Indian company, an Indian airline company, which is second most valuable airline company in the world, which started and right now operating as a basic service airline, which might in the times to come go for a full service kind of an airline. And the PE multiple enjoyed by this airline on a forward basis is amongst the highest PE multiple on all the airline stocks across the world. This is all for this week. Thank you.